Hello. How about now? Anybody here? How about now? Anything?
Yeah.
Hello.
You good?
Yes, we fixed it.
Yeah, buddy.
Sweet. How about now? Oh, it's delayed. Anything?
Yeah,
All right.
it's delayed by a few. It's all
We
good
got
now.
it. We got it, buddy.
Nice.
All right. Hi, everyone. It's been a long time. Alex, really good to see you. I don't know if you've ever... Did you meet Alex Bejan, Jamie?
We never. Yeah. No, I don't think so. Was in this in London?
I don't think Alex... I don't know if Alex
I
was
don't
there
think
in
he came to.
London.
No, hang on.
Alex was in
a photo there
Vancouver.
somewhere. No, I never went to Vancouver.
Okay, yeah, dude, I haven't heard from Alex since Vancouver. I hope you're doing okay, buddy. It's a long time. And Nathan's we've got four fans. I think the two fans are us two and Alex and Nathan. Perfect. So,
you got to start somewhere, man.
Yeah, so let's get this party started. This is the first time. I think the quality should be pretty high too. Can anyone confirm that we've got the quality issue figured out too?
It looks good on my 3-inch iPhone.
Oh, that's great.
I know. So it's always good.
It looks good on my 3-inch Winka. All right.
Special wink.
So I've got a little, I don't know. I put together some stuff, but there's a lot to talk about. We're going to try to keep this to an hour, right? We want to stop in 50 minutes to an hour?
Yeah. Well, I mean, I can always tinker off at past and then you can carry on.
Okay. Yeah, whatever needs to be done. Let's get started then. Well, first of all, I'm glad we're doing this again. It took us a good 2 months to finally get things together. A lot of shit has happened since then. Yeah,
definitely. Not on my end. I mean, just chilling indoors. But yeah, for you, I don't even know. I mean, have you slept much?
Have I slept much? Yeah, so I had a baby in March, end of March, the baby came. And it's funny because Alex knew Carly. He's like, why doesn't your wife drink? And I was like, well, she's kind of like, because nobody knew during the Vancouver meeting that she was pregnant. And I was just like, well, she's, just taking it easy because she's being the designated driver. And she was like driving people's cars around and taking us places. And she's like, oh, it's okay. I don't mind being designated driver. But really, she was just trying to hide the fact that she was pregnant. So anyway, I had a baby at the end of March, and I've been waking up about every 3 hours, taking this kid to diaper change or to shit in the toilet, Jamie. This kid does not like pooping in its diaper. It poops in the toilet. It's crazy.
That's what's happens when you create an alpha human. They're just too far ahead. You've got to remember, you got to start reading them strength. You got to start reading strength theory soon, mate, because otherwise it's pointless.
Yeah, that's true. So yeah, it's actually I woke up at 5:30 this morning. I'll just keep talking until you get yours figured out and just interrupt me. I woke up at 5:30 to take the kid to the bathroom, and I noticed that crypto had hit a significant area that looked like it was ripe for a pullback. So I was just sitting in front of the computer, and I'm like, oh, you know what? I'm gonna help this kid get to bed after the bathroom, and I'll just see if I can put a position on. And sure enough, I never wake up at 5:30 in the morning. Like if it's before 9 a.m., I'm just not happy to be alive. And the 5:30 in the morning wake up being forced by the kid helps you kind of sit in front of and do stuff because you're already woken up. You're sitting in front of the kid trying to get its diaper changed and get it settled down to go back to sleep. And that's about an hour-long process. So that's what I did this morning. I was watching the futures market, and I was watching the oil market absolutely tank. I mean, Jamie, I think what you had was actually the real live quote on the live crude, on the light crude future, the CL1, because you told me it was below $2. I think mine is delayed here. My ticker on my CL1 showing $1.30 right now. I mean, this is just crazy. And then, you know what? What's even crazier is that I saw this tweet here. If you guys don't follow this Quote the Raven guy on Twitter, he's actually a Philly native. He's got a good podcast. He's kind of crazy, but definitely has good shit. evidently the CME came out and said that they have no problem letting oil trade negative. CME says May WTI futures can trade negative. Let's see if we can actually get CME May WTI if there's news. Yeah, so everyone's tweeting about this. So we could potentially see this thing go negative, which is just absolutely insane, right? If anyone remembers oil back in 2008, this thing was like $140 or something, and now we're down to $1. Just mind-blowing. How are you doing over there?
All good. I think I won't present, because if I present, then it will switch to my screen.
Well, that's
Although
fine.
I have I suppose I have a disclaimer at least from.
Oh yeah,
I could use the presentation I used earlier, and then we'll create our own ones in the future.
Well, I can present your screen. It's no big deal.
Can you?
Yeah.
Hang on, let's have a look. I'll see if I can be a big boy and do it myself. How are we looking? Can you see it now?
I can. It will pop up here. Maybe. There it is. Yep.
There we are. Disclaimer sorted. We always said we were going to have one.
Thank you. You finally got it going. Let's do it.
But we'll have to create our own presentations. But yeah, man. Shall we switch back to yourself and talk about what you've been looking at for now?
Sure. Yeah, I can talk about stuff I'm doing. I guess I should just take off from the oil situation. I don't know if anybody's playing this or if it's on your radar.
Yeah, you're a massive oil bug though, aren't you? I literally, like, for me, I'm just like, yeah, beyond my comprehension. I'll be like, yeah, I'll stick to equities. I've got 10,000 other ideas I can look at. Like, so I don't know having thing what, like with oil, no position, unless obviously I'm looking at, say, airline stocks that rely on it up to some point. So, but that's not necessary at the moment. So chilling.
Okay. Remember when we took off from the last show, we were talking about shorting airlines and hotels and cruise ships?
Well, I did. I shorted EasyJet, so I had a good time.
Nice.
I was short credit. I still am short a few names, but then I bottled it. Like, I think EasyJet, I stopped out at like 500. I got in. I think I made a good 50% on that one. But then other ones, I just bottled it because the volatility just went so crazy. So I think I had Louis Vuitton, so I was short that. Stopped. So I just took profits on most of them, to be honest. Now I'm only short I'm just still short Apple, but it's more or less just Credit Auto, CACC. I'm still short, which is a subprime auto company. So, if things do get worse and deteriorate further over the next few months and people are still in lockdown, then so I'm short from about, I don't even remember where, to be honest, somewhere up there. I think I'm short from about 340. So I basically just started adding to the position. So I was short from up top, but then I just started making it a larger and larger position. So but for now, yeah, they're more just, I'm neutral at the moment, more or less. So I'm just hedged with a couple of long names.
But before you move from this one, can you explain, because I really like this idea, can you explain why you liked shorting this? Because of the, what risks were involved with this company?
Yeah, so basically the premise of this one is, so for people who don't know, I'm not like a day trader or whatever. I trade like anywhere from, I don't know, from a month onwards, depending on how either the trade is. It's more like I usually do it more from a macro view. I'm a lot more fundamental than I am technical. So so this one is basically a company that solely give subprime loans. So for people who don't know what subprime is, well, what do they say? It's a big shot. If you think the subprime, think shit. So so they're really high leveraged loans, and they're the only ones they do. So very simple play. Obviously, with everything going on with the virus, we started seeing this coming out, and I started to see quite obviously with everything that's gone on over the whole cycle and the problems that's been going on with companies with having a lot of debt. So I started to understand and see that the credit markets were going to basically take a massive shit once we started locking down. So this company actually have double B. So double B basically is junk bond. So the initial move down is simply because everyone's on lockdown, people are losing jobs, and the type of people who are getting these loans are people with really bad credit scores. So if they had credit scores before, then you can't even imagine. So some of their KPIs. So KPI for people don't know means key metric indicators. So their KPIs is predominantly the amount of money they retain from the loan. And also regulations have changed. So now companies who give out loans now have to give what they project and they think they're going to be able to get out of the loan, the amount of money they'll get back from the actual loan, which has fucked up a lot of companies and fucked up this one more. So the initial move down, double B. So the double B is obviously the high yield corporate market went to shit. And the bounce back has simply been because of the Fed. So the Fed the last couple of weeks obviously said a couple of weeks ago said that they're going to start buying high yield. They're going to buy double Bs basically. So that's basically given a little bit of hope for this company. But as far as I'm concerned, I'm just going to leave it how it is because, I mean, it all depends on everything's uncertain, so we don't know what's going on. So I feel like the market's priced in until basically the start of June. But if that goes on and the lockdown goes on for longer than it is, then I think we could get a lot worse from here. And then this type of company are going to obviously once we start getting higher delinquency rates with loans, then this company is going to follow. But yeah, I'll stop out if it goes up to scratch because obviously you don't know what's going on with this market at the moment. But yeah, for now it's a nice idea at least. So that's one of them. Yeah.
No, I think that's great. I think you do have to wonder about credit risk and things of that nature. You talked about the high yield. You just look at the HYG, and it was interesting because this is kind of the same scenario where, if you remember, Plunge Protection Team back in the day when they'd come on and say they would buy stocks.
Well, no. It turns out, what is this? Tell me. Explain.
There was the Plunge Protection Team back in 2008. That was basically the administration at the time was Bush, and they hired a bunch of people to work for them. One of them was Pippa Malmgren, and she talked about things like working on the Plunge Protection Team back during that era. I think it was the 2008 time. But anyway, she said that they actually didn't end up buying any of the stocks. They just announced that they were going to buy stocks. And the scenario and psychology of just simply announcing that they were going to do that, it made the market bounce. And here you have the Fed who's coming out and saying, yeah, we're going to buy high yield. I mean, can you actually see the Fed coming in here to buy the stocks? I don't know. I don't think you can actually trace that other than just, there's obviously a bounce coming in here. Is that a direct effect of the money?
Yeah, the high yield is the bounce back was simply, if you put it on a daily chart, you'll be able to see the day that they announced. There we are. So you see the massive gap that you've got up there. The massive gap was, so obviously you had the rumor of the Fed saying that they might buy double Bs. And then when it did happen, it gapped up again. So yeah, so for now, I mean, it depends how long they're going to buy these double Bs for, but yeah.
It's crazy. It really is. And the credit market before all this went down was just so fucked, but now it's gotten repaired by the Fed propping markets up. I don't know how long they can continue to do this before things break even more, but it's certainly, I mean, basically we're in uncharted waters, right? You've never really seen anything like this happen before. It's just absolutely stunning. It's almost like you have to question whether capitalism is real through this whole thing. Because there's no such thing as a free market. If the Fed's just going to come in and just buy shit, it's mind-bending to me, Jamie. It really is.
Well, I think this is the thing, is that I think people, it's not that they don't understand, but because so much has gone on and so quickly, this, yeah, like you say, this isn't, I mean, it hasn't been capitalism since 2008 anyway, when they started bailing doing QE, but this is insane. Like, this is actually the Fed going out and basically buying debts for the American people. So, I mean, it's just madness. And I mean, when they come out, I think Powell came out and he was like, yeah, once this is done, though, that's it. We're not going to do it anymore. but they also said that about QE. So, I mean, if you're a big company and you're just like, fuck it, let's just, we can do what we want, because the Fed are just going into even more like just crazier scenarios of buying our debt anyway. So what does it matter? So it's crazy. So like at the moment, I mean, for me, I mean, I was talking in the last presentation I was doing, and I mean, you've just got to do your trades week by week at the moment. I mean, you do it week by week, whether you want to sell them and buy them or whatever, but until you process the information that comes out on a day-to-day basis, you can't really have much of a long-term view at the moment. I mean, depending on what you're doing. I mean, if you're going to invest for the long term, even now, would you invest now for the long term? I know I wouldn't. I'd wait for another massive drop down.
Yeah, I mean, it just depends on what you're looking at, right? I mean, there's definitely going to be a few things that are going to be great buys right now for the long term when it comes to things like hedging against inflation, or the whole risk of the Fed printing all this money. I mean, you can argue that that's inflation in the long term, and whether or not that actually does come in, great. That'll be even better for the idea of things like long gold. I think that's something to get in on the long term. What do you think?
I think, so long term, I mean, if we're talking real long term, then I mean, gold would be good. I think in the short to medium term, I think we will definitely get deflation, because I mean, especially with oil prices at this price, and then I mean, one thing I'll be looking at over the next few months is the inventory buildup within companies, because if we start getting huge inventory buildup in companies, then, well, I mean, you're going to get deflation more than you're going to get inflation. And then I suppose the question is whether you want to go long gold or not, is if you can find assets that are going to outperform gold. Because, I mean, if I can find a transportation company that is going to be at 3 PE or something like that, then I'm definitely going to buy that more than I'm going to buy gold, simply because everyone needs transportation. And at a PE of 3, when, let's say, transportation sectors, we're looking at an average PE in the industry of around 18 to 20. I mean, everyone needs to travel regardless, no matter what type of environment you're in. So, it's difficult. A portion of the portfolio, for sure. I think it's always a good thing.
It's interesting that you bring up transportation, because I saw I don't know where I saw it, and I wish I had the article, but basically there was an uptick in, maybe it was a survey actually, either way, but the point was that people were either buying cars because they didn't want to take public transportation because of the risk of infection through this whole thing, or it was a survey that people said they would rather take private transportation over things like, I'm talking about their own transportation, not ordering an Uber and going to work that way. It would be, I'm going to go and buy a car or lease a car and go and drive around, as opposed to the old style of commuting. Because you have to think, with the way that the virus has permeated society, it's permanently changed the way that we think of living our lives. So things like private single transportations, which I guess are just cars. Nobody's going to buy a fucking helicopter at this point. You've got to think that the auto industry, once they get their plants back open, I mean, maybe car sales will go up. I don't know. Like, I have a hard time believing that people are going to have the discretionary income to buy a fucking car. But I think that leases are going to do well. I think that monthly, they already were doing well. And I've been seeing tons and tons of commercials with like, we've got this great incentive where if you lease a car now, we'll pay for the first 3 months of your lease and defer the payments for 3 months. So you basically get 6 months worth for a free car. I guess figuring out who's making those loans it's probably a good play.
Yeah, I think it's difficult. I think leasing is probably one of those things. I mean, you might get an uptick for maybe a couple of years with car sales, but I honestly don't know, because I mean, even let's say the average American, so the average American that I can't remember where I found the data once, but saw the data, and more than ever, Americans now are buying cars and basically not buying and using that car on average for 9.5 years. So over time now, the average American is actually buying a car and keeping it for a lot longer than historically. So from that point of view, interesting. And then another thing is, I mean, how long will it be until people forget and they just go back to normal? Like,
Yeah.
the public, how much is the public going to go, well, you know what? The government have just said, there's no more cases now. Everything's fine. So how long will it take? It is really difficult. And like we say, I mean, we're not going to know until we come out of this and even understand what the effects will be. Will more people start cooking at home now, rather than going to restaurants, because people have, well, started to cook a lot more and they've had to. I mean, it's really going to change things, but I think, I mean, it's so difficult. I mean, for myself, it's just looking for crazy, crazy good levels. Companies with virtually no debt, and basically will do well coming out of it, and ones that everybody needs. Just bearing it back to the basics, like the transportation. I mean, one of them was, my best one was NEX. NEX was my best one, but I was so annoyed because I couldn't actually get into it. So NEX, I don't know if it'll be .l. That's not the ticker for it. NEX on the LSE.
Oh, okay. NEX. Come on. The fuck is
Mine's been slow as well, but basically, I tried to look for historical levels on the PE ratio, and I only bought a tiny bit. It was like tiny amount percentage for the portfolio, but it's a company that is used for public transport in the UK, and I managed to get it all the way down at, I managed to get it down at like 68 level, like basically close to the bottom when all the panic was going on. And that was only because I had it all set. So I think if we do get another move down, it's just, you can't really value anything too much because obviously all the forward fundamentals are all skewed. So I'm just trying to use the historical fundamentals. It's the only thing I can do really for very long-term plays. And then, we'll just have to see if we end up coming out of this in May, June, or whether the lockdown will go on longer than the market personally has priced in.
What do you think about that? How long do you think we'll be locked in, or what in your mind does this look like? Because they want to start partially reopening things.
Well, this is the thing. So, I mean, if you're going to look at stuff, I think you've firstly got to look at the countries that are later in the curve. So the ones, even though obviously the Chinese data is really skewed, then maybe we've got to think of like the worst case scenario. So if we get a second wave, probably looking at China's cases and looking at the rate of change of that. Also, looking at how countries like, I think Germany are starting to open up, Austria, how they're opening up and which sectors are going to be affected by it. Because, public transport is going to be more frequent, but then you think there's going to be a concert in 2020. I can't see a concert being done in 2020. So I'd be looking at companies like Live Nation, maybe, different ones, and have those as like a cross sector play. So you'd be, say, maybe look at one long that'd be public transportation, so what everybody needs to do as soon as it's coming out of lockdown, and then short the ones that are basically you can't really see them opening anytime soon, which would be, I don't know, what ones have you got? You've got like companies like Eventbrite or different companies like that. I mean, I'm pretty sure they've been pounded already. So it's cool, but I mean, it's just trying to make sure that if there is a second wave, then you're in ahead of it. But your portfolio is going to change depending on what goes on week on week. So it's just so difficult. It's so difficult to judge. I don't know, man. But I think the markets are priced in up until June. So if America comes out and they say they're going to lock down into July or later into June, I can definitely see the market moving further down.
Yeah, I think that's a big risk, is that it seems like here in the US and even in England, the push is to kind of gradually reopen. What's he saying? Probably changing resolution fucked up the chart. Maybe do a refresh on the page. Someone's saying the YouTube. Alex is saying the YouTube's fucked. Oh, I see what you mean. Yeah, the chart is fucked up. There's my fibs disappeared. God damn it. I don't know if this is my internet or TradingView or just like okay, here it is. Whatever. Anyway, I think with UK and the US and a bunch of other countries, they really want to start opening up the economy piecemeal because they're seeing the damage being done. And I think they're delusional in a variety of different ways. The first is that they think that by reopening certain industries, that it'll kind of jumpstart the economy or at least get the ball rolling again. I don't think they understand that the damage has already been done. Just because you're opening up some of these companies doesn't mean that the money's going to start flowing in the same way that it was before. I think a lot of these companies have lost not only customers, not only contracts, but there's also a lack of liquidity now. People have lost a lot of money already. I mean, even when it comes to real estate, one of the big pushes here, at least in my state in Pennsylvania, is not only to reopen construction, but also to allow realtors to work so that they can let people walk through houses as opposed to sitting in their houses and looking at a house with an iPad walkthrough through FaceTime. They think that people are still going to be going out and buying houses in droves. And it's funny because I follow a couple of these realtors on Instagram, and they're just pushing really hard to show that, hey, we sold a house today. And it's like, yeah, you sold one house out of thousands in inventory where you usually sell maybe 3 to 7 a day before the crisis, at least from what I saw on their Instagram. So things are down. People aren't going to be wanting to go out and buy things, especially when it comes to real estate. And I think a lot of people are going to wait for those to come down. Now, yeah, there's a big problem with, mortgages and big, let's say you live in an apartment complex and you you rent your apartment. The guy who owns the property isn't collecting rent checks from his tenants anymore, and he can't provide the funds to the bank to pay his mortgage, to pay his property. So what happens to him? If they do reopen some of these, it just, to me, it looks like the downstream effects are going to start kicking in. And I think along the lines of what you're thinking, it's just like, even if we don't reopen, things are still bad. And even if we do reopen, things are bad. It's just, there's no winning here. And there's a permanent damage to the psychology going on in that, I don't know about you, man, but I don't want to go sit in a restaurant. I don't know where, Joe Blow, who's sitting next to me, has been. I mean, I was walking around yesterday. People are fucking sitting outside in groups of 20 drinking beers. I'm like, what the fuck is wrong with you people? Like, yeah, you've probably been quarantined for 3 weeks, but what about your buddy who's sitting on the side there who decided to go mow his buddy's lawn, and he talked to him face to face, and he was just getting whatever. It's just frustrating. And then here in the US, you have people protesting. Like in the news today, there was shit of,
I'm not gonna lie, you lot look crazy over here.
This is
people
here.
Standing in front of the town hall with guns and stuff.
Yeah, man, this is freaking
like what the? It just blows my mind.
This is what was happening here in Pennsylvania. People were storming Harrisburg and protesting. Same thing in Michigan. There's thousands of these idiots. Well, look at this.
They're on the rise over the coronavirus shutdown in Pennsylvania.
About 1,000 are expected. It's been a lot of music, a lot of chanting, and a lot of signs, a lot of pro-Donald Trump signs, a lot of anti-Governor Wolf signs, and a lot of signs saying they want Pennsylvania to get back to work. Now, today's rally is a mix of several groups that have decided to meet here today. Some organizers have...
It's going to be all right.
It is, but the problem is they're going to reopen things piecemeal, and eventually you're going to have wave 2, and I believe that wave 2 is going to be worse than wave 1. And people are saying, it's actually not that bad for people under 50. There's the death rate isn't that high for them. Yeah, that may be true. People are saying they can't hear me speak now. Man, this is just, can't get this right, can I? Audio default should be working. Let me know if can you guys hear me? There's one Alex is the only guy listening. Oh, with the video playing. Oh yeah, no, there was no audio with the video. Gotcha.
Okay.
So look, I think wave 2 is going to be worse than wave 1, and there's some threads
do you reckon I'll have time to at least chill for a bit in between? How long? Tell me.
How long before wave 2 comes up?
Between wave 1 and wave 2.
I mean, I think they're going to start reopening things in May, and then probably by the middle to end of May, more shit's going to open up. So
Do you seriously think the US will open in May?
I think they're going
Do
to
you actually buy that?
they're going to partially open up things like construction, real estate, and manufacturing jobs like factory workers. You know, there's nothing going on right now, right? You know, there's really no industry at all. Things are so shut down that that's actually, you know, not to sidetrack and get off topic, but that's part of the reason why the gold spreads blew out last, 2 weeks ago. Well, there was a big difference between futures and spot, and that's because the refiners in Europe were all shut down. And moreover, the LBMA bars that are supposed to be guaranteed for delivery on those contracts through the COMEX, they couldn't be delivered because there was nobody around to go in the warehouse and actually go in, pick them up, and ship them out for delivery. So that's why futures and spot blew out, because they thought there was default risk on the COMEX. Well, that's subsided for now. And I don't think that's because they started delivering it. I think it's because people started shorting the futures market to make money and put that cat back in the box. I mean, premiums in my business just blew out. I mean, right now, gold is 1,700 on the spot market. I mean, things are trading at 1,850 right now. So call it about 9-10% premiums, when about a month ago there was zero premium. So things have gone really crazy in the gold market. And then just one more thing that I want to, well, you know what? Let's go back to the coronavirus thing. So I think they'll start opening up things piecemeal, mid-May, end of May, maybe a few more things. I mean, if you look at the stupid freaking, look at this. There's the White House coronavirus opening plan, or whatever they call it. Here it is. These are the, can I get a link to this from the White House? There's, I don't know if I'm going to be able to find it fast enough, but it's basically this stupid PowerPoint that he puts together with like 3 different phases of how they plan on reopening the economy here in the US. And it basically, here it is. So phase 1 is basically, where is it? Continue to encourage telework. If possible, return to work in phases. Close common areas, which are, obviously closed already. And then minimize non-travel. It said something about restaurants. Avoid and socialize in groups of 10. Basically, phase 2 starts coming out and says that they can start opening up restaurants. Where is it? Here it is. So gyms can remain open if they adhere to strict physical distancing. I don't know about you, man, but I'm not going to the gym when they're reopening things. Like, what am I going to do? Like, work out 10 feet apart from the next guy and wait 3 hours for his air cloud that he's coughing and breathing heavy full of virus?
You'll have that. You'll have like every 2 treadmills, you'll have like red and white tape crossed on every. It's just weird, isn't it? But it's right. Like, this is a thing. It's going to be, it's just crazy. I mean, it's speechless, to be honest. I just can't believe what's going on. It's either, if you're going to have a view, then for a long term that you think a company will be fine, let's say even 12 months, let's say, like minimum, that they'll be fine in 12 months and then they'll be profitable in 3 years. Because there's no way a company's going to be profitable for the first year, because people just won't do these things. I can't see it happening. It's going to be a very slow and gradual thing. So it's weird times. Small businesses are fucked, man. I mean, there were 2 programs that they launched in the US from the CARES Act. There was one called the EIDL, which was like the Employee Disaster or Economic Injury Disaster Loan. Listen, I have a small business. Obviously, you guys that are following me know that I buy and sell rare coins and gold, and that's been my business for the last 6-7 years now. And I can't travel. Like, the majority of my business is predicated on physical delivery, right? I got to go there, look at the shit, and buy it myself. I can't go anywhere anymore. Like, my capital stream through the business has drastically slowed. I mean, there's definitely still business going on online,
but it's hard to buy a coin where the value is determined by its condition. And inspecting its condition is something you have to do in person. Like, there's only so much you can capture by a picture. So it makes things hard. Anyway, I applied for these two programs. One was called the EIDL, the Economic Injury Disaster Loan. And it came out and they said, well, if you fill out this paperwork, we'll advance you $10,000. And then based on your overall sales and your profits, we'll give you a loan at 3.75%. And if it's more than 10,000, we'll evaluate that and give you a loan over that. But in the short term, we'll clear you for $10,000 right away. Well, that was all fine and good when I applied for that. That actually, and just to be complete with that description, there's no forgiveness on this specific program. There's the Paycheck Protection Plan, the PPP, that actually has loan forgiveness. So it's essentially a grant. This one was not. So they wanted to give $10,000 up front. And then I think it was about a week and a half ago, they changed the wording, the verbiage here. I don't know if I can find it, but they basically changed it from a $10,000 loan advance to, oh, it's only $1,000 per employee once they saw things in terms of funding running out. So that was fucked. Like, I have 3 employees. $3,000 isn't going to give me shit, right? That's like one paycheck. That's not even like enough to cover 2 employees' paychecks. It's a joke. All right. So then there's the Paycheck Protection Plan. This was supposed to be, long story short, they take your monthly payroll over the course of 12 months. They add it up, divide it by 12, and then multiply it by 2.5. And that's supposed to be how much money you get. And if you keep your employees on through June, then basically it's basically free money. And you're supposed to use that money only to pay your employees, pay rent and utilities. And anything else, essentially, you would have to pay back the loan. Well, I applied for this thing. My bank, first of all, this is just such a nightmare. I don't even want to go too far into it because it was so infuriating. But there's a couple of things that have come out essentially saying that only these big companies ended up getting these loans, and small businesses, in which this entire thing was designed for, actually didn't work out the way it was supposed to. So this guy, Charlie Billelio, tweeted out, I don't know if I said his name right, sorry, but he came out, he calculated how much money was approved, how many loans were there, how many lenders are there, and he was able to calculate that about 5.4% receive funds. So 5.4% receive funds, and almost 95% receive nothing. And some of the top quote unquote small businesses that received these funds were Potbelly, which is a chain sandwich shop, Ruth's Chris Steakhouse, this Fiesta restaurant group, Shake Shack, which actually ended up, they were in the news because of this. Every company obviously is getting shit on. Like, do you guys really need a loan that's designed for small businesses? And they said, oh, you know what? We're just going to give this back. The max loan was supposed to be, I thought it was 10 million. So I don't know how Ruth's Chris got 20 million, unless maybe it was 100 million max. I don't know, but I didn't get shit. And the bank basically came out and said, well, once you apply, you're not allowed to contact us. We're not going to give you any updates. And we'll just let you know if you get it, because the funds will show up in your bank account. Well, I got an email on Sunday that said, well, because on actually this past Thursday, evidently the funds ran out through that program, the bank came out on Sunday and said, well, we couldn't process your loan in time, so you're not getting any money. I mean, this is just like a disaster, man. And to get to the point, essentially, small businesses are quickly running out of money here. And this can't possibly end up being any use to people, especially with the economy opening up, right? I would say out of all of my friends and the people I do business with, no one's paying their bills, right? They're only paying the essentials, which include paychecks, maybe if they have to pay rent, which I don't think many are if they don't own their own building. Credit cards, those are all on hold, man. I mean, I called every single one of the credit cards that I have a balance with, and I said, listen, what can you do for me? Every single card said you don't have to pay anything, with no interest, no late fees. So nobody's paying off any of these credit cards. They're just like minimum payments are coming out of their accounts for things that they absolutely need to pay off to keep their business with the lights on and able to do the minimum amount. Once they reopen the economy and the credit card companies have to be paid, this is fucked.
Well, this is the thing, is that, I mean, even here as well, the UK banks. So here, I mean, I got a text message off my bank last week, and it was like, yeah, you know, you can use your overdraft, no problem at all on your credit card, and it will be 0%. So my question is, well, the amount of people that are going to be basically taking advantage of that and levering up massively, and then as soon as it comes to a text message that will say, okay, starting from this date, you've got to start paying it back, and your interest will be this, even the data will be so skewed because your delinquency, like the delinquency rates on so many different things will just skyrocket. So it's like, it's kind of, at the moment, even the data that's coming out, you can't even read into it until things are opened up, and then they go, okay, now you can open, like, now we're going to start charging you interest. It's not until that date happens is then that's when we'll get the true reading of what the fuck has gone on over the last few months. Like, it's madness. So
I think you're right. I
can't. Sorry, I just can't get over this. Like, just being on TradingView and then just seeing US oil minus 99.95%, and then as in like the CFD, it's at 1p, but then it's already on the CMA. On the CMA, it's already gone into negative territory. So, man, sorry, I've gone completely off key, but I just can't get over it. Like,
that's mad.
It's actually insane. But how? I mean, my question is, because I'm not an oil bug, so I wouldn't really know. But how much is this going to move into the equity markets? Because it looks like at the moment pretty stable. To be fair, I mean, what, down 1.1%.
Yeah,
I mean, how long until this negative sentiment would actually move? Would it move the market? I honestly, I'm not an oil person, so I wouldn't really know. But
I mean, that's a loaded question, but I will answer it. And it's a good question because we were talking before the show started about the USO and how people may be interested in playing USO. Well, don't fucking do it. Whatever you do, if there's one thing you take away from this podcast, do not buy the USO. It's a horrible idea. Now, there are guys that are way better and spend their entire lives learning about this. From my limited understanding of how this works, the USO is currently using the June contract to price in. So the June contract is currently, I mean, I can't really get my charts to load right now. I don't know what's up with TradingView or if it's my stream, but basically the June contract is trading at about 2 times what the May contract was. I mean, back when it was $10, which was earlier today, now it's $3, right? Or no, it was less. What was it, like $1.50? Do you actually have the current CL price?
CL1, yeah?
Yeah.
I don't know what's going on because mine isn't loading either. Is this a TradingView bug?
Oh, people are saying, oh, hey, what's going on, Ryan? Good to see you. Yeah, this is basically everyone has taken at TradingView their frustrations out on the market by tossing the servers against the wall. It's like, I didn't know oil was going to go to $1. Fuck this.
Yeah, the amount of notifications noobs have had, and then they've just logged on to TradingView quickly just to see if this shit was real.
I mean, it's a disaster. So let me explain.
Hang on, Oh no, I can't. I was going to say I could go on Icon quickly, but I don't have it logged in.
All right, so here's our poor man Bloomberg, okay? Right now, the USO is essentially an ETF, right? And these things are made up of other things. Well, you go into CoinFin, you find out, what the fuck is this USO made up of? Well, 86% of this stupid shit is from June, the June futures contract, not the current month. So if you're buying USO right now, you're basically buying the June contract, which was rolled over last week, which means if they were rolling this into the June contract, you would expect the USO to go up because the June contract is trading at a premium. Well, essentially, this thing is trading at such a premium, it's in super contango. And that essentially causes this roll problem where every month they're rolling in the loss from the previous contract into this USO, and you would basically need the USO, you would need oil to go up to like $40 or something, based on whatever calculation I made before that I don't have on the screen now. No, sorry, you don't need the USO to go to $40. You need the June oil contract to go to $40 to get the USO to get its head out of its ass in order for this thing to continue moving higher. Yeah, Alex, that's actually the June contract. I don't think that the CL1 actually bounced back up to 21 bucks. They may have just gotten rid of the May contract already because it was so illiquid. Chai Girl was actually tweeting out about this. Hang on, let me show you what she was talking about. If you're at all interested in oil and you don't follow Chai Girl, you don't know how to trade oil. So she's talking about, stop quoting May. Literally 3 computers are trading it. It's illiquid. And then here's Eric Townsend, you know, the Macro Voices guy. He goes, disagree. There's still a surprising amount of liquidity in the KMX traded trade spread, which is far more relevant. He said, this is May, not the spreads. June is liquid. So I don't, you know, Eric can be a little mouthy. So point being, you need a massive, yeah, you know, let me actually see CL1. Let me just Google this thing. $1.42. This is the, I think this should be the May contract, right? Oh, fuck, this is not right. WTI, maybe. Maybe I can get a WTI price. Well, that's not going to give me. Well, this is saying $2.02, right? So that was pretty close to. No, that's not right at all. Can't get the barrel price on here. CL1. That's not going to give it to me. Great. Maybe Bloomberg will. Is this really negative $3? Did you see that, Jamie? Did we lose Jamie? Oh, you're on mute, buddy.
Yeah, man. Yeah. -3.
What? I mean, this is just wild. This is... You'll never see this ever again in your life, by the way. This is just absolutely insanity. That's probably why they took the ticker off, because the thing went negative even. Oh, you know what we can do? We can go right to the CME. Here we go. All right, so May, they're saying the last price was negative $5.98. Holy shit. The June contract's trading at $21.18. So they let the May oil contract trade negative. So they will now pay you to get an oil, a barrel of oil. I mean, that's just, it's insanity. This is really just really, you know. So anyway, whatever. Point is, the June contract's trading at $21. If the June contract starts going down, this USO is going to go even lower. They rolled this into the June before the May contract went negative. Before the May contract went negative, it was at $10, right? You can see, I mean, just look at this candle action. This is wild. Hot. Launch it a pop-up. Let me get this full screen here. So before this all went down, earlier today, this was at 17 bucks, right? I mean, really, oil was almost at $20 yesterday, and now it's negative $6.78. So they've just gotten rid of this contract now. And the June contract trading at 21, they rolled this thing earlier. So you would have thought that rolling it from a roughly $20 contract, and then if you change the June contract and take a look at what it was before it dumped, before the June contract dumped, it was at, you know, $24, $25. Yesterday it was 27 bucks. You would have expected the roll to make the USO go higher because they're rolling it to an oil price that's higher up. That's not how this works. You're actually rolling the previous month into the current month, which rolls a loss forward, and that keeps the USO depressed. As long as you're having this super contango situation and oil is not going back up, USO will continue to either trade sideways to down. Now, there's some people that think that they're going to reverse split this thing, and that would be even worse if you're holding USO contracts, because then, you know, maybe they do a 10 to 1 or whatever it is, and essentially you're just going to be bag holding this thing forever. I mean, I don't, you know, the other interesting thing is, could this thing potentially go bankrupt? And I don't know. I'm not smart enough to figure that out. But that's basically, in a nutshell, why you should not be trading the USO, even though you're probably looking at this and like, oh, I want to buy oil at negative $8 a barrel. Well, let me tell you something that's actually even more interesting to play, and those are oil tankers. If you guys listen to the Market Huddle and you've ever heard of this Harris Kupperman, you got to listen to him. He's basically a trader that swings for the fences. He's all or nothing. He's rah-rah bullish on this shit and has been bullish for 2 years, really. He's just, you got to take him in stride, right? This guy is just so bullish, these oil tankers. But it makes sense, right? So the reason why this trade makes sense is because since oil is so cheap, if you can actually buy it at negative $8 and have a place to store it, you can immediately turn around and sell this thing in June for $21. So you're making what, almost $30 a barrel. I mean, is anyone going to sell you oil at negative $8? I don't know. I don't know how this works now that this thing's trading negative. But there's so much oil on the market that it needs to be stored someplace. And the typical storage facilities like Cushing, Oklahoma here in the US, and a couple of other places throughout the country, they're nearing full capacity. And as that happens, there are other places that this oil will need to be stored. Some of those places include tankers. So some names that are interesting to watch are this company called TK Tankers is one. Another one, which I'm actually involved, I have call options on, is this Scorpio Tankers, which is also the one that this Cuppy guy is like Mr. Bullish on. I bought this thing, I don't know, I've been tweeting out about it for the last couple weeks. I think I bought it last week, maybe. Yeah, here we go. So April 9th, I was tweeting out about this Sting. And back when I bought this thing, it was trading at $17.50 a contract. I bought the $20 calls, and I think I paid like $1.50 for them. And now this thing's trading at $22. The real crazy thing about this thing is the implied volatility. Anyone who plays options will know. I mean, the implied volatility right now, as of this moment, is currently sitting at, where'd it go? I mean, last I looked, it was at 120%. I imagine it's even higher now. But anyway, this thing's trading at a bid of $4 and an ask of $4.40. So I think I've pretty much tripled up at this point, or pretty close to tripling up on this position. I think this thing's just getting started. People have to pay money. They have to pay what are called charter rates to store their barrels of oil. Maybe it's something else, but essentially they have to pay to store their oil on these tankers. And why wouldn't you if you're going to make $30 a barrel? I think the rates, it would be smart to at least look at the rates and how much it would cost on average per barrel. But this thing is essentially going to be printing money over the long run. Their earnings are coming out in 2 days. I mean, you guys that are technical traders can see here that there's a really nice double bottom that's forming here on this. Let me make it big here. Obviously, you've got your nice double bottom, W, breakout of the neckline. I mean, this thing looks like it's just getting started. If you just look to the January highs of $40, I mean, a nice 61.8 tag is $29. The problem right now is I think the options are probably overpriced at this point with the implieds and things that have rallied, and you probably need more of an advanced strategy of playing this thing through owning the underlying stock. But I mean, if you really want to swing for the fences, you can buy some crazy out of the money calls. I think even the $35 leaps into January 2021 were expensive. I was looking at the $35 calls. I mean, but look at the old highs of this thing. I mean, once its earnings come out, I think this thing's just going to fly. You just kind of have to finesse the way you want to play this. So that was a long rant. Jamie, I know you got to run. Sorry I took so long to blabber on here.
No, blabber away. I'm listening. To be honest, I'll stay on for another 15.
Oh, really? We're that interesting?
That interesting, man. I'm just gonna sit and listen. Just chill. I'll sit. Where you at? Are you gonna do, what are we talking about next?
Well, I mean, these are my only plays right now, are gold and oil. I've been thinking about shorting the S&P. I think that would be an interesting play. You just kind of take a look at your fib zones and where this thing could stall out, and just taking the fundamental approach to how everything is fucked. And this is just some temporary. Right. I mean, the fundamentals.
I've seen that in all the research papers at the moment. So, what's your bias? Fucked.
Well, it's funny because before I get into crypto, I actually have this in my notes as something I wanted to talk about, and this is something else. I've been trying to be good at tweeting out my thoughts. I'm sorry, I probably don't cover all of it, but this was one thing that I did tweet out, which was this article on Zero Hedge about this company, this very famous hedge fund. What are they called? This Jim Simmons Medallion Fund. He's from Renaissance. Anyway, at the bottom of this page, before I get into the crypto part, there's this huge disclaimer that basically says how things are really in trouble with the coronavirus and if the outbreak continues. And I basically read it and I was like, so basically, if you replace all of these words to things are fucked, you could get fucked, things will continue to get fucked, and if you play things, you're going to get fucked hard. It's basically the fundamental analysis of all this. So, I mean, look, that's kind of that's the way things are right now. I mean, I just don't see how businesses are going to open back up and generate profits unless they've pivoted their business models and they can take advantage of making money from home somehow. Maybe that's selling masks, printing PPE or printing face masks with their 3D printers and selling them to the public. Or if you're Kim Kardashian on Instagram and you've pivoted to she's making fucking face masks now and selling them. It's like,
I'm so glad I don't have a television or anything like that.
So, I mean, I just don't see I don't see the economy recovering in the way that I really don't know who's smoking the crack here and buying these markets. I just don't get it. So I see risk here.
Yeah, I mean, it is difficult. For me, it's just literally long-term plays. If I see a company and I'm like, yeah, you know what, this looks good, like ridiculous, like complete, utter, like bargain price, then I'm just like, yeah, I'll nibble in. And then, but even then, if we start getting it where quarantine ends up going on for longer, then I'll just have to get rid of the positions regardless, because they'll just get hammered that way. So, yeah, I don't know. And then crypto, talk to me. I see corn's moved down a little bit, a few percent after oil thought it would go to zero.
Yeah, I can't say I'm much of a grain expert. I mean, I don't even know what the corn ticker is.
Sorry. I mean corn as in BTC, my friend. Sorry.
Oh, okay.
How dare I? I always say corn because in public I say corn if I'm talking about corn.
Well, the reason why I thought of the actual grain is because I know that corn has been performing in a very interesting way for traders, but we're not going to talk about that. Anyway, Bitcoin, let's go to that. I think something's fucked up, right? Because the futures market is trading at a discount to spot. Is that correct? Are you seeing the same thing?
Yeah. The thing is like at the moment, I was talking to people before, and I was saying basically, if you've got a view on BTC's future price, then you have to have a view on the S&P, because at the moment it's just all so correlated. I think I tweeted out the correlation.
That was such a great chart. I can bring that up for you.
Yeah, if you bring it up, it's basically it was the correlation between the S&P and Bitcoin over the last 5 years. So that was a weekly correlation. There we are. Yeah. So on the left-hand side, you've got the correlation. I suppose I should explain the correlation. So basically, if it's zero, it basically means it's little to basically no correlation to the asset that you're looking at. If it's 1, it basically means that it's strongly correlated to that asset. And if it's -1, it basically means that it's the opposite. So it's negative correlation. So if you look at the weekly correlation over the last 5 years, you're looking at around 0.1. So that basically shows that there's hardly any correlation between BTC and SPY. But then since we had the pandemic and we started having the move down in the S&P, the correlation between the S&P and BTC. So I basically just got Monday to Friday prices for BTC and the SPY and look for the correlation. So the correlation at the moment is at around 0.57. So 0.57 is moderate to high correlation for against the S&P. It's probably actually higher, but the problem is that obviously because Bitcoin trades over the weekends, so even though I've done the Friday to Monday, obviously the price action moves over Saturday to Sunday, so it's probably a higher correlation of 0.57, but I wouldn't be able to you can't calculate that. But at 0.57, it's still really high. So at the end of the day, until it decouples, like let's say gold did in 2009, then you've got to have a view on the S&P. Otherwise, if you don't have a view on the S&P and you're going to trade BTC for a few days or something, well, like if you've got no view on the S&P, it's pointless. So, yeah. So that's basically it, to be honest.
That makes sense. I mean, with this thing, you can even see this chart on the right here of Bitcoin versus ES1. I think it's very well correlated. And you obviously did that well with your Pearson correlation. So you have to pay attention to the fact that as the entire market's going to sell off, it's going to drag every other market down with it, with the exception of a few things. And that's kind of how you have to trade right now, with the idea that if the broader market sells off, people are going to sell whatever they can to raise money to meet their margin requirements or their margin calls. It's just the fact of the way this thing's going to work. I'm trying to get the oil contract up here because someone was texting me and saying it was trading at -40, and now the CME site's not working. It's freaking glitching out. I mean, that's just crazy, right? Like, this thing seriously is, they took it off. You have to buy the historical data to see this thing now. That's
what?
Yeah, look at I can't get, a technical error has occurred. That's incredible. I don't know how else to see this, but evidently it's -40. You're watching the most historical meltdown in oil in history. This has never, ever happened before, and probably will never happen again. But damn, I mean, have you ever seen something trade negative?
I mean, it's absolutely nuts. I have no idea. How are some of the, I wonder how the airlines are actually reacting to it.
Oh, that's a good point. Let's see, AA.
Oh, it's not working.
American Airlines. Yeah, I got American Airlines. You got to type in the ticker, otherwise it won't let you select it.
Right.
So Delta. I mean, it's definitely not dumping the same way that the other places are. The airlines are. It's not dumping the way oil is, but I would be interested in things like Phillips 66 for oil refineries. What other companies are there? There's Halliburton. Yeah, none of these are really doing the same thing. They're just like, all right, May contract, you're on your own. Let's see who's tweeting about this. Breaking news. I wonder.
Welcome back. 2:31.
WTI. Oh, look at this.
They've
got
oil has officially closed up for the day, and this is going to be one for the record books. Look at what's on your screen right there. That's the price of WTI crude. It is at -$35.
This is incredible.
Down 290.
I wonder what they're saying. I can't actually.
Let's go to Brian Sullivan with more. Brian, now that the close has happened, what next?
He's like, looks like things are bad.
I don't know, Kelly.
Last time I saw this was never. Good talk. All right. Oh, wow. So bankrupt trading firms, NYMEX, margin calls not met. So this is going to be a problem, right? If the if people were long oil, they're essentially getting margin called right now. So you're going to start to see, I mean, oil is one of the largest trading futures contracts. I believe that's correct. So if anyone's long this thing in mass, with big money, they're going to liquidate whatever the hell they can. And we may see those ripple effects come into the market here over the coming hours. I mean, granted, right now, this hourly candle on the S&P doesn't look dumpy yet, but I can't imagine this is going to be good. I mean, I'd be interested to see what the 10-year is doing. ZN should be the one. Nope, that's zinc futures. What's the 10-year? God damn it. US 10, I guess I could do. Yeah, so this isn't going to be as good as the futures, but yeah, I would imagine that this is going to be a problem for the 10-year. Wow, dude, this is nuts. It's like every day, it's like 2008. It's just not as crazy as 2008. It's almost like more prolonged.
I honestly don't remember. I don't remember 2008, so I haven't got a clue. But when you for me, it's like watching the films and then thinking, nah, it wasn't that crazy. And then going through this now, it's like, oh, It is that crazy. Okay.
Yeah.
I mean, it's nuts. For some reason, like, yeah, it's been really weird with some of the spreads today, like different, like the US, I mean, the yield curves, I mean, it's doing nothing anyway, like 10 take 2 year. I wonder how we're getting on with bonds, all good. We're looking all right, to be fair, for now, but it all depends on when these margin calls are going to be hit. When's the end of the day? Got quite a few hours yet, haven't we?
An hour and 16 minutes until close.
It's only wow. 6. Jesus, it's 8 o'clock already.
Yeah.
Today's been a long day.
Wild. I mean, look at this. This was tweeted out a minute ago, 3 minutes ago. The last one on Bloomberg was minus 58.30. Oh, no, that's the loss. It's negative 40. And the future, it doesn't expire until tomorrow.
Jesus. Well,
wow. This is just stunning. I mean, the fact that this is happening right now and you still see the stock market kind of hanging up, it's just like, really? Really? Is this is how you're playing that? Wow. And then look at this, didn't age well. The big oil deal with OPEC Plus is done. This will save hundreds of thousands of energy jobs. Blah blah blah. Yeah, that. Incredible.
I love it when people do some crazy like magic ball tweet, and you're just like, really? You really want to put yourself in there? Like,
I mean, if you actually shorted the May contract, do you think you could have made money on it? I assume that you would. Like, is there counterparty risk with the? I don't know.
Honestly, man, no, God knows.
Holy,
my friends, I'm gonna have to love you and leave you.
So closing thoughts for Bitcoin and crypto? What you're bullish, bearish, price targets?
So
go.
Obviously, you know, I like my Hut 8 position, the Bitcoin miner. I think is the best and most trusted Bitcoin miner. So the ticker is just Hut, HUT. Yeah. So yeah, basically last weekend on the Friday, I basically just took profits. So I took profits. I think my average was $1.05. So I was just like, look at this, take profits. At the moment, it's just with everything that was going on and what everything is going on now, and the correlation that it's got against the S&P and where we are in the S&P, I just thought, you know what, I'll take the profits, and we'll see how we get on this week, essentially. So yeah, I'm not going to bother trying to be a hero. I just feel a little bit too uncertain. I had quite a big bag of this, to be honest. So yeah, I just got rid of the most of the position now. So just to chill me out, because if, like you say, if tomorrow we wake up really negative, then HUTs can easily go back down to the lows again.
Gotcha.
So it's just unnecessary risk. I've had a good year. The first 3 months have been really good for me from the portfolio. So it's like, why risk it?
Mm-hmm. So are you a long crypto other than through this HUT 8?
Yeah. Well, I just hodl my BTC, just the standard hodl against the financial system play. I mean, I've still got some from back in years ago, 2014. So yeah, I don't bother trading crypto because, as somebody who just looks at fundamentals, I really don't see the point. Unless the only time I've ever traded it is only when prices have gone through the roof, and then it's just been like, okay, just take some profit, turn away, and then prices just come back down. So, no, man, I'm just chilling. I'm just hodl BTC, and then if I'm going to trade it, then yeah, I'll rebuy back into some more HUTs. Other than that, I think the thing is that I see HUTs outperforming in general. So yeah, I think that'll be a lot better.
Yeah, I hope we can rally here. I've got a baby in the background. Maybe we're gonna have to cut this short.
Yeah, no worries, man. No worries.
I'll just go real quick. You look at the spreads here. Bitcoin forwards contracts versus spot. It's hovering at about positive to negative. I mean, a second ago it was negative 15. I can imagine this is going to be bouncing back and forth. But I think that, oh God, this thing lost its fibs. Let's see. Is the baby really loud in the background?
It sounds like a trader with long oil. That's what it sounds like.
Yeah, you know what? We should put this on Twitter. When oil hits -40, this is what happens to every trader. Wow. All right. So really quickly, Bitcoin here. I mean, I'm just doing a simple fib from the lows at 6,500 back to the highs. And, we need to at least tag this mountain man level. I think that 6,800 in the short term is a good place for this thing to bounce, if not at this 50% level, if we can't put in that short-term bottom. I think long-term, I'm still bearish because I think the broader market, as Jamie discussed, is correlated directly with Bitcoin. So as the broader market sells off, it's going to drag this down. I have some tweets that show some crazy levels down here in the 37 to 4,100 as a target. Whether or not those come true, again, are directly dependent on the equity market selling off. So if you don't see equity selling off, you're not going to get that kick down in Bitcoin. But long term, I think Bitcoin is very, very bullish once all this shit can leave the market. Same situation for Ethereum, same levels. Just draw the fibs. Ethereum's actually holding up a lot better than Bitcoin is here, and I think that may be a result of some fundamental thing going on with the way that they're restructuring the protocol. I don't remember. I've just become more fascinated with the broader market than I have with the fundamentals of Vitalik Buterin and the way he's going to shift from proof of work to proof of stake. That really doesn't mean anything to me right now. So I apologize if you are coming here to listen to some great fundamental analysis on crypto. You're not going to get it. This is about as good as it gets. I'm just technically trading these markets. I am short from this morning. I said I woke up at 5 a.m. I shorted from one of these candles here. I think it was like 182 or so is where I went short, where it was 5 a.m. Right around here. So I probably got in on this candle as this thing broke down. My target should be right around 50% level. We're not even close to that. We got pretty close here. I've been way too overzealous with my targets on Ethereum, so I have to kind of tone it down a bit. Maybe I'll start taking partial profits here at 38.2 because no, I'm not. I'm going to wait until that 50% tag because I imagine, okay, so here's the thing. This is how the oil market can impact crypto. People are going to need to liquidate their crypto to pay for their margin calls, which is like, I can't, everyone was so excited for institutions to come into crypto and push the price up. And now it's like everybody's worst nightmare because the institutions are like, oh shit, we need to sell whatever we can get our hands on. Hey, John, what was up for the year that we can sell off and still maintain a good percent? Oh, well, Bitcoin's up like 60 or whatever percent it is since January. Sell whatever you could get. Sell the Bitcoin. And that's what happened. And we're going to see the same thing happen throughout the rest of the crypto space. So, Jamie, I think that sums up my views here. Just watch my Twitter account. You guys, all 7 of you who are watching right now, if you really care what I'm doing, it'll be up on Twitter. And, feel free to message me. I'm happy to chat. I was thinking about starting a Discord and, maybe a couple of other things that Jamie and I have been talking about. So maybe now that we're stuck at home and I'm just being a trader because I can't travel anywhere, which, by the way, is really hard to just stay still because the last 7 years I've been on the move. But, yeah, man, happy to do this whenever. Maybe I'll jump on from time to time and let you know if you want to jump on just to talk about crazy things like oil being -40. I mean, how low can this thing go if it expires tomorrow? Like, maybe this thing goes negative infinity. Why the fuck are they letting this thing even trade negative? Makes no sense.
I have no idea. But yeah, I don't know, man. We'll see. To be honest, I'm really looking forward to actually being able to show a setup of a trade using my fundamental analysis rather than just going, yeah, everything's going to shit.
Sorry. Yeah. I mean, look, it's a pretty decent analysis, don't you think, though?
Oh, no, of course. I mean, technical fundamentals, it all goes out the window at this stage. So, yeah, until we actually get some certainty, which I can't wait for, to be fair, where I don't have to be at my at my desk straight on the open and have to watch things for like an hour a day or something. Like, it's been nice before where I can just look at my spreadsheets, put the trade on, and then just chill for a month or two.
Totally.
Oh,
I've kind of been enjoying this quarantine just from not being stressed about who I'm seeing, where I'm traveling.
My life hasn't changed, to be honest. It's exactly the same. Other than going to see family and friends, nothing's changed, to be honest. I can still go for a run. Yeah, so pretty chilled for me.
That's good. All right. So then I guess we should probably cut it off then. We can chit chat another time. You know what maybe we should do if things are interesting is this Friday we can do a whiskey broadcast where we both look at the market and see what's up and drink.
I did leave some as well. Like I left some for this Friday if need be. I had a good night though Friday.
Nice. Yeah, I think I sent you a picture of my whiskey bottle, and I decided not to drink it just in case we decided to do a Friday broadcast.
Yeah, well, we can do one if you want.
Yeah, why not? I mean, things are going to be interesting. I guarantee you by this Friday, things are going to be way different.
We'll get everything set up properly. We'll get a document going with presentation notes. I like to do it nice and sleek, the sleek way.
Sounds good. All right, then let's call it a day. This was fun. I think this was our best one so far out of the last few days, The only 3 that we did so far. Anyway, it was great to see you, Alex. Great to see you, Ryan. Really, Ryan was in Philadelphia and he decided not to hit me up. Thanks a lot, buddy.
Yeah, cheers, guys. Come to Britain anytime you want, no problem.
Yeah, well, hopefully we'll be able to get on an airplane and go to you. I mean, oil should be cheap enough where our plane tickets they should pay us to fly.
United Airlines will be paying you for first class.
Crazy. All right, buddy. Let's call it a day.
Yeah. Take care, guys. Take care, buddy. I'll chat soon.
All right. Cheers, Jamie. Cheers, everyone.